Hey, thanks for joining me. It is Sunday, the 24th of July. Okay, we're going to have a look at the usual roundup of markets on my weekend webinar. We'll start with gold, silver, and oil. Quite a lot to look at, actually. Things are kind of working out as I expected with stock markets higher this week. Gold gave us a buy signal on Thursday, so that worked quite well. Anyway, we'll have a look at all that in a minute. Just a quick one for anyone who doesn't know me and you're watching my weekend webinar for the first time. Please have a look at my website, daytradeideas.co.uk. You can see what we're all about. If you look at the menu, you can talk to me for free. Where's my menu? There's my menu. Free mentor session. Click on that if you want to have a 15-minute, 20-minute chat with me. Maybe I can help you with any trading issues that you've got. Blog, loads of information on there, educational and analysis. I update that quite regularly. So have a little look. Online course, that goes down really well. Okay, enough of the plug. Let's get cracking. Gold. I always try to start with gold. One of my favorite markets. Gold has been pretty good on a technical level. So we had this big double top. We expected gold to go down. This is the monthly chart for gold. Don't forget, you've got to look at the monthly chart once a month. So big double top in gold. That's why I predicted the gold price would fall. We held around 1830 for a little while, actually. And once that broke, I suggested that we'd have further moves to the downside. The obvious eventual target was the 38.2% fib, which is at 1680. Guess where we went? 1680. So, all fairly obvious. I'm just using trend lines, moving averages. I'm just using Fibonacci levels, candle formations, candle patterns. So, actually, what was the high of last month's candle? 1814. Okay, not quite 1830. As you can see, 200-week moving average has done a good job previously of being a support level, at least on a closing basis on the monthly chart. Sorry, 200-month. But of course, we broke down through that, so that was a fairly obvious sell signal. Same thing happened with the 200-week moving average, which had been a pretty good support level. And then once that broke, bang, down we went. Okay, so 1680 was my target. If you're a subscriber, you will know that my buy level was 1680, 1675. Wish I'd made that 1685, 1680 would have been even better. But I'm hoping you did manage. I know some of you did manage to jump on board that long position. So that was good. Now, not only did we get the buy signal, not only did we hold the that longer term support level, but look at this little beauty. Very oversold on the daily chart. Then we got a bullish engulfing candle, bang on my support level, which was just a nice little confirmation to say, well done, the support level held, and here's the confirmation that there are a lot of buyers coming in. Obviously, I wasn't the only person to spot that support level because the buyers really did come in. Bullish engulfing, engulfed the previous 2 days trading. In fact, even this big red body candle. So that really was telling me that there was a bear trap, basically. Bears were trapped. There was also a nice little trend line here, actually. So that trend line joins from the bottom of May until the low point in July. Now, we did break below it momentarily on the day, but of course we were saved by that big fib support level. And the buyers came in, and now this market ramped up 40 points from the low. So if you did manage to buy just on that day and even just took the profit by the end of the day, you're still looking at a 40-point profit, which is pretty big. Even in gold, that's pretty big for one day. Now, as you know, I wrote in my following day that the outlook was positive because we had confirmation from the bullish engulfing candle that the market would probably trade higher. So we did trade higher. In fact, my next target was 1735, 1738. Why did I choose that? Because it's a 23.6% fib. Very simple. I took that. I'm going to show you where I took the fibs from just so you can kind of learn a little bit. So this is the peak. That's the swing high peak, the second peak for the double top. I just took that and put it down to the swing low. That's my first set of fibs. Then I look to see if there is a little swing high around the 61.8, and if there is, and this was perfect because it has got a long upper wick showing that it really was an important level. The sellers came in, left a shooting star candle, and there we go. So that is definitely a point where I'd be happy to take my second fib level, and then I did the same thing at around the 50 because that's a very obvious swing high. So that gave us a 1736. So I called it 1735, 1738 as the resistance level. We hit it bang on and we came back. So clearly that's what we need to beat this week. And I think we can. I think we've come off a good support level. The stochastics have started turning positive. We've got the bullish engulfing candle. That's 3 good reasons. And we bounced off this trend line. So that's 4 good reasons. So I think we're going to make our way up now. 1770, 1775 looks like a very obvious target. You can see why. It's the big 23.6% fib. It's the 38.2, the second set of fibs. It's even a 50 on the third. And we've also got a trend line going back to April. So what's that? 1, 2, 3 months. So it's going to be quite an important trend line as well. That 3-month trend line intersecting with the Fibonacci levels. I would have liked to have seen a moving average there just to really back it up. But the moving averages have flatlined for such a long time now, because we really did trade sideways all through. Well, blimey, look at that. I've forgotten that. July through to December, we were flat. Spiked up, came back. So the moving averages really haven't been reacting, not on the daily chart at least. Of course, on the 4-hour chart, they've been a lot more reactive. But do we have a trend moving average up at 17? We actually, you know what we do? I'm going to show you this 4-hour chart. By the time we get to the mid-70s, 1770, 1775, then this 200 period moving average, I would imagine, will be down around here if we do get there this week. So that just kind of lends some extra weight. 4-hour charts usually pretty good, worth paying attention to. I haven't got lines on there, but look, that's where we would be. And you can see that red 200 period moving average on the 4-hour chart is kind of just trailing along that 3-month trend line that I had on the daily chart. So that really should be a nice level, and I think we can probably get there too. So if you're still holding longs from the buy level that I gave you on Thursday morning, or no, sorry, on Wednesday, I gave it to you, Tuesday, Wednesday. If you still manage to hold on to longs because you feel like we can keep going up, I think you could be right. If not, break above 1740. I think that's your trigger for the move to 1770, 1775. Now, silver, we also have a bullish pattern. So it's always nice when silver and gold, coordinate, give me the same sort of signals. Just gives me a bit of confidence. Otherwise, I kind of guess which one is the dominant one. And actually, silver was probably leading the way lower before. But anyway, silver has been weaker than gold for quite a while. Nice trend lines on here, working pretty well. You can see that trend line gave us a low down here. The first low that we had 2 weeks ago. Then last week we retested that area, and I had a feeling, obviously, that we would bounce simply because gold was testing such a big support level. Now, I didn't see a big support. Oh, did I? Did I? Hang on. Got to look at the weekly chart. There was a level down there, wasn't there? Yeah, it was a 61.8% fib at 1865. Now, we did overrun it the week before, but we didn't close below it. So that's confused me because we overrun it by quite a bit. We didn't quite get to the 500-week moving average. Let me check the monthly chart. No, there was nothing on there. Okay. Back to the weekly. So silver is finding some support around the 18.5, which is a 61.8. I think really it's gold that's supporting it more than that 61.8% fib level. But we do have a double bottom. So on Friday morning, I did notify you that we have a double bottom buy signal in. I've got to say that slowly. Double bottom buy signal in silver. Nice bullish candle there. What do we call that? That's a hammer, is it? Long lower wick showing aggressive buying, actually closing up on the day. Bit of a shock to the bears there in the bear trend. They're not expecting that. They're expecting us to break the previous low and go down. We didn't. Okay, red candle Friday, but I'm going to take that as a consolidation, not as a sell signal. And I'm going to suggest that silver will begin to climb too. So I just need gold to break above 1840, 1740, and then that should trigger a move. Now, obviously, silver's going to get through sort of 1915, and then that should push us up to test this area, 1975, 1980 trend line, fib, etc. We'll have a look next week and see if we get anywhere near 2020. Okay, let's stick with commodities. I'm going to look at oil. Oil is usually a confusing chart, if I'm honest. There we go. Yes, I know why I wanted to look at oil. Okay, so oil's been in a correction. We need to see that on the weekly chart. There we go. There is oil on the weekly chart. This is the September contract, so it's September only data. And I'm going to put my fibs on there. Here we go. And guess what? Good support level on the September chart, at least at, well, we're going to call that 86.5. Where did we get to? We got to 88.23. Not that close, to be fair, but you can see it's a good support level, at least on the September chart. I'll look at the continuation chart as well. But if we were to dip there. Right, now, this is the important thing for oil. If you are an oil trader, pay attention to this little beauty. I'll just expand this out. Okay, can you see what I'm seeing here? Quite a bullish pattern, potential bullish pattern, not completed. But bearing in mind that oil is in a correction, we would be looking for oil to hold support levels because the buyers haven't just given up on oil just because it's come down a bit. They will be looking for opportunities to jump back in. And this looks like we have an inverse head and shoulders pattern. So this here would be the left shoulder. This is the head. and this is the right. It's a beautiful symmetrical potential head and shoulders, inverse head and shoulders pattern, reverse head and shoulders, whatever you want to call it. Okay, because of course it's the mirror image of the upright head and shoulders pattern. Now, if we continue to hold here, this area here, we've got the neckline at around 100 to 150. 100 to 150 cents, $100.50. You know what I'm trying to say. We've got to get above 101 to complete the buy signal, complete the inverse head and shoulders pattern, which could send us from. Let me see. We take the low of the head, 88.23. We take the high of the right. Side triangle. So we're looking at we're looking at nearly 300 points potential. We're looking at 300 pips. No, we're not. What am I talking about? We're looking at 88.23. That's 12. We're looking at the best part of 13 points. So that would take us up to 113 as a projected target if that works. I'm not saying we would go that far, but it's worth paying attention to. Now, you might also be thinking, if you follow me, or look at my blog and my videos and my YouTube channel, you might be thinking, well, hang on a sec. You always say that the inverse head and shoulders pattern has to be relative to the move, and this is quite a big pattern, I will admit. It's taking up nearly half of the move down, so it's a little bit ambiguous. Maybe it's too big to be a real inverse head and shoulders pattern, but I'm going to go with it. I'm going to go with it in particular because we bounced above. It was 2 points above, but we did bounce above an important fib support level, and we are in a bull trend, so it would be normal to expect the market to bounce. I like the fact that we got the 100 period moving average, which has acted quite nicely as a resistance. So if we got above there, that would also be positive. And I'm just going to suggest that this is probably worth paying attention to. It would be a trend change of that, a change of that short-term trend, correction trend. So something to keep an eye on if you think I'm right, if you think that is an inverse head and shoulders pattern. And the other thing is the 100-day moving average comes in quite nicely at that area as well. So that just reinforces the fact that it's an important area around, I'm going to call it $100 up to $101. It really is an important resistance area. Certainly the 100-day moving average has done its job of holding the bounce so far. How good has that 100-day moving average been as a support level? Yeah, pretty good. Pretty good. It usually is. So yeah, a break above 101, a sustained break above 101, that's your buy signal. But of course, we could just hit 100, 100 spot 50 and turn around. The resistance level might just hold. So you're going to have to be nimble on that one. Okay, dollar index has been in a bull trend. We've had quite a decent correction. Not sure what the trigger for that has been actually, but technically it's been doing what it should do. And I will need to show you why on the monthly chart, I think, because it's this trend line which is doing a good job, coupled with the fib levels. Where are we? Okay, that's what I'm looking for. Nice little trend line here, going back to end of 2018. As you can see, that peak held, then we broke above it. Now it's a support level, 100-month moving average at 95 bucks. Must remember that. Let's have a look. Okay, so the trend line has held quite nicely. I actually thought we'd bottom out around 106.5. We overran it on the week, but we didn't close below 106.5. So I had what did I have a buy level of? You can probably remember. I think it was 107.00, 106.50, stop below 106.00. I can't, but anyway, we've had a good bounce for the US dollar. No, I didn't actually have a trade idea for that, so I'm lying. I just suggested that around the 106.5 area would be a good support level, and we overran it, but we did recover. So yeah, we are in a bull trend. We got a little bit oversold on the daily chart, which is what you want to see if you're looking to buy into a support level in a bull trend. What do I want to do with this trend line? That's what I want to do with it. Then I'm going to put another one here, which is going to be a bit steeper, and then I'm going to put another one here. I like to do this. There we go. Okay, so there's your trend lines. Nice and simple. Trend line there held 106.00, coupled with the fib level that I showed you on the daily chart. So I think the dollar will rebound. I think it's kind of testing the break point there, isn't it? So it could be time to buy the dollar again and sell another currency against it. So we'll have a look at which one that might be. Aussie dollar versus US dollar has had a really good run. Take that off. Has had a really good run. Now, what do I want to look at? I want to look at the daily chart, I think, for this one. Actually, I'm going to look at the weekly chart. Just a quick look. There's your weekly. Yeah, I didn't put the fib levels on there yet. I need to fib from the peak to the low, and this ties in beautifully. Look, the big 23.6% fib at 69.93. The 200-week moving average at 71.30. No, it's not. That's a lie. Is it? How can that be lower than the fib level? What's going on here? That moving average. What am I not reading properly? Why is that 69.93? That's confusing me completely. Hold on a sec. I'm going to have to pause this. I'm quite sure why that moving average is indicating a price of 71.30. That's wrong. The 23.6% fib is at 69.93. We got up as far as 69.77. There's a trend line there as well. There's a lot going on in this area. Look, this trend line joining this trough, this trough, this trough, that's coming in at 69.82. So anyway, there's a lot of resistance up there. 200-week moving average. So it's not surprising that that has been such a resistance level for the Aussie versus US dollar. So basically, all that really matters is I'm not even going to bother looking at another time frame. It's all about the weekly chart, the fib, the trend line, and this trend line as well going down. So we are hitting a good resistance level in the Aussie dollar. The Kiwi versus the US dollar has been a beauty, actually, really trading nicely within the ranges. What did I have on my? Let me get my cheat sheet up there. These two levels, 62.90, 63.00, 61.95, 61.85. So just around 63.00, 62.00, we got a good resistance level and a good support level. I've had them on the cheat sheet most of the week, actually. So you can see why the resistance level is there. We've got the fib level. We've got the 50-day moving average, actually, which is is starting to flatten out. We've got a trend line also. So this area around 62.90, 63.10 is going to continue to be a strong resistance level for this. Now, on the short-term chart, you can see why I have also that support level and 61.95, 61.85. It's a beauty, really nice on the 4-hour chart. You can't really see it anywhere else. You have to look at the 4-hour chart. Got a moving average crossover, 50 crossing above the 100, bang on the fib level, which is 61.80. So 60, 90, 60. What did I say? 68. What did I say? 61.95, 61.85. Yeah, I had it a little bit higher than the fib level. That's what I've chosen, and it's been working really well into the end of the week. If you've been scalping that one, well done. That's not a bad little 100 pip scalp there. But so it all depends on this. Break above 63.20. That's going to take us significantly higher, of course, in the Kiwi versus the US. But I've got a feeling the US dollar is about to start gaining ground. So that might be. We may have already seen a high for the bounce for that pair. ECB raised rates by 0.5% this week, which sent the euro wanging around against the dollar. But the levels are holding really well. And again, it's just fib levels. It's amazing how these things work so well sometimes. Not always, I will admit, but sometimes. Now, there we go, just below the chart up. So, taking the previous peak from, what was that now, June of this year, last month. So that's just the last leg down. We've got a good fib level around 101.50, 101.40. So once we broke up through there, that's been working nicely as a support level. And of course, we've got resistance at 102.60, 102.70. Again, put that on the cheat sheet, I think I have. And that has been, there we go. There we go. Where's my cheat sheet? Aussie yen, I have a euro. There we go. Euro's down there. So those are my levels. Well, actually, I didn't put the 102.70 because the bigger level for the euro, if we were to get higher, is actually around 103.10. So this is a more minor level when you look at it on the weekly chart. So I kind of chickened out of putting that level on the cheat sheet. I had it on the report, and if you've been trading that, then you've done okay. You've been scalping that one quite nicely, but actually it's 103.10, 103.20, and that's why I put that trade on the cheat sheet, because this is the big one. Okay, let's switch over to some yen pairs now. Let's start with the dollar yen. So the dollar yen's been correcting to the downside, and we wiped out the previous week's gains, which I didn't expect, to be fair, and I don't think we've hit a big support level yet. I think we can get down to 103.50, 103.40. This 50% is a minor one, did hold perfectly. Not easy to read. There wasn't, for me, any indication that the dollar yen was going to reverse. I didn't see anything at all. But, you know, corrections are corrections, and they will happen in the longer term bull trend. There's nothing to tell me that this is about to collapse and wipe out a lot of the gains. There we go. I suppose when it broke that trend line, that was your indication that we were going to go down a bit, but I wouldn't have been put on a short position just based on the break of one trend line. Anyway, I'm not going to spend too much time on this. I think the downside will be limited. I think 103.5, 134.5 will be a good support level, but we'll see how that goes during the week. I want to crack on with some other things. Aussie yen. What was I going to say about the Aussie yen? Okay, actually, forget that. Euro yen, New Zealand dollar yen, Aussie yen. I don't really have a lot to say. I do have trade ideas in there. So if you're a subscriber, you'll be getting this very shortly. Well, you'll have already received this. Aussie yen, dollar yen, Euro yen, New Zealand dollar yen. I do actually have some trade ideas, but there's nothing that sexy in the charts that I can really use sort of for educational purposes or to explain why. So I'm just going to leave that. Now, Bitcoin, I really thought, I haven't said buy Bitcoin for such a long time, and I did a video on it during the week suggesting we had a buy signal, and I really thought we did, but it's not the case. Unfortunately, these bulls just cannot get their act together in Bitcoin. When was the last? It was months ago that I suggested buying Bitcoin, and I just thought, yeah, here we go. I can finally keep the bulls happy because no crypto bull likes me. I've been talking this down ever since the end of last year. I've got no crypto bull friends, but anyway, it's not to be. They just can't get it together. They've fallen at the first hurdle, sort of 22,900, 23,000, and we just couldn't make it. The first time we attempted it, we got a bit of a gravestone doji. We tried it again, we got a doji, and then we've just not been able to close above 23,000, and it just they're hanging on to this 50-day moving average, and I think if it was going to happen, it would have happened by now. So sorry, I just don't see this as going up. Bitcoin, crypto, all remains in a bear trend. It just doesn't look good at all. Now, one or two of you have written to me and saying, "Hey, thanks, you saved me a load of money. I watched your videos earlier in the year, and I did get out of crypto on your advice. So I am really happy that I have helped you, and thanks for the feedback. That really is important to me. I've been getting quite a bit of feedback, actually. Thanks for your comments. Oh, more comments. Tell me what you're thinking. Tell me how I can help you. Tell me if you like what I do, and tell me if you don't like what I do. Subscribe and like and share as well. You've been good at that. My numbers are climbing, and I really am grateful. Okay. So Ripple again. Thought we were going somewhere, but we're really not. What have we got here? I haven't actually looked at these charts yet, so this is the first time I'm looking at them since Friday. So I'm going to go through them with you as I do them, and I think need some more trend lines. Look, this is so obviously a sideways pattern when you put the trend lines on it. So obviously a sideways consolidation. I'm still going to leave that little diagonal one there. I think it's still relevant, but clearly we're not going anywhere. There really just isn't the momentum. We're just not able to build the momentum to the upside. I could argue that this is a rounding bottom. I could argue that if you are if you're long Ripple and you're looking for some reason to hold on to the position, I could argue. Listen, I could argue that's a rounding bottom. And when I put the fibs on, I like the way they line up really nicely, actually. 61.8 fib there, lining up well. What's wrong with my scale here? Something wrong with that. I don't know how to get it off. Okay, so the fact that the fibs line up quite nicely gives me some encouragement that this could be a rounding bottom and we could go up. I mean, look, that's all I got for you. That's really not, there's not really a reason to buy Ripple. It's a very weak argument. I'm just trying to give you something there, but that's it. Okay, Ethereum. Oh, Ethereum is trading above 1550. That's not looking too bad. Where are we? Okay, that's actually holding above 1500. That's actually quite positive. Maybe this is a consolidation before Ethereum takes off and gets up to 1800, 1850, which is a very strong resistance level, and I would suggest probably a nice place to get short. Getting overbought already, but the fact that we're trading sideways above that 1500 area would give me some reason to feel like it's worth hanging on to. Let's have a look. What else we got? If I put some fibs on there. Yeah, 1820, 1850. It really is about as far as we're going to go, probably. Okay, yeah. Wish I could be more positive. I really do, but I just can't. But anyway, if I had to be long anything, I think I'd be long Ethereum. That looks like we could get to 1820, 1850, but the rest don't look too good. Right, where shall I go now? Stock markets, I think. Okay. Actually, here's where I'm going to go. You'll know this from watching me for a couple of weeks. You'll know that I called it a low in the stock markets, and you'll know why. Mostly because of the Nasdaq and the Dow Jones. The Dow Jones bouncing beautifully off its support level. The Nasdaq not getting as close as I would have liked it to have done. But anyway, I called a bounce, and I really thought that the stock markets would actually, I thought they would actually turn in more of a V shape, really. I thought we'd get a short squeeze and we'd really go, and we didn't, to be fair. So I wasn't wrong about that. It's only now that we're starting to climb. We had to do all this congestion stuff under the 500-week moving average before we could break higher. So there was your consolidation. Then we broke up. The break above here was just the obvious buy signal. If you jumped into that one, guys, my Nasdaq subscribers, then you've done quite well. Not so good on Friday. We pulled back, and I honestly thought we had some momentum. Why did we pull back? Probably the 500 period moving average on the 4-hour chart. Look, the green one. It really is a strong level. If I scrunch this up, and I haven't looked at this, but I'm guessing that will have been historically quite a good support resistance level. Well, look, great support level. Once we broke it, then it plunged. Not a great resistance level, actually. You would have got stopped out on a short there. But anyway, looking like a good resistance level at the moment, isn't it? Certainly has worked, that 500 period moving average on the 4-hour chart. So in the short term, I'm going to throw some fibs on here. I'm going to stick with my bullish outlook, although it does look like it's going to be a sort of 2 steps forward, 1 step back rally. We've got some good support here. We've overrun the fib level a little bit, but we've got the 100-hour moving average and the trend line just catching it there. So I think the bulls are still in with a chance. I think we can overcome that 500 period moving average on the 4-hour chart eventually. Timing, I've no idea. We're holding above this 23.6% fib, which is pretty good now that we've actually made it above there, and it was a struggle, sort of 12,400, 12,300. So yeah, I think stock markets can continue to crawl higher. I thought once we broke out of this little consolidation, we could really roar, but Friday we didn't see any follow through. Anyway, the other thing I like is that we're trading above the green 500-day moving average quite nicely. We've got way back above there. All right, I'm going to see if the Nasdaq can climb. I think we can. Where can we get to? Obviously, we would want to test the 100-day moving average, which is going to be around 12,900, but we could get to 13,225. Actually, that's quite a lot of resistance there, isn't there? Around 12,900. So we'll have to see whether we get through that. That's actually quite interesting. Where would I put? Oops, where would I put my horizontal line? There. Yeah, you can see from the price action that 12,900. I'm going to call it 12,900, 13,000. That's going to be a tough level to get through. Maybe that will be the end of the rally. Okay. Even the S&P, that's been the beauty, and this was the one that only bottomed out because the Nasdaq and the Dow Jones bottomed out. I personally couldn't see a reason why we turned, but we did turn, and we have now broken above this trend line. Nice big green candle. Off we go using 1920, 1910, sorry, 3920, 3910 as the support level, as was supposed to happen in the middle of the week. So that's good. And the fact that we've held there, okay, so the low on Friday was 39.41. We didn't quite get to 39.20, 39.10. If we do get down there at the beginning of the week, I would suggest again that would be a strong support level, and I would expect us to bounce off there and eventually get to 40.80, 40.90 for the S&P. There's my target. I think I'll be trying to short up there. It's a good resistance level. You can see why. 100 period moving average coming down to meet it. 500-day moving average definitely hovering around that 38.2 fib at around 40.80, 40.90. So let's see if we can get up there this week. We've got a bit of work to do to get there, to be sure, but I think we'll get there. Let's have a look at the 4-hour chart, because I've got a trend line on there. There we go. Okay, nice technical chart, really. So the minor fib level is at 40.17. Look at that peak. Coincided nicely with a trend line. This only goes back to May, so it's a couple of months old. Very, very short-term stuff. This is what you're looking at if you're a scalper, really. Real nice support level down here at 38, sort of 38. What am I calling it? 38.80, 38.70. Stop below 38.50. If we were to get down that far, we might do. That's a nice little scalper's chart, that one. Scalping levels. When I say scalping, you're still looking at 30 points profit for a maybe 10-point risk. I think that 3-to-1 risk ratio works for anybody on a scalp. So that's what I would be doing with my charts if I were you, if you're a scalper. Anyway, but the bigger levels are there. 40-20-10, 39-20-10, 40-80-90. Those are the big levels for this week. Dow Jones is a bit messier. I'll show you the chart. Again, I think the Dow Jones will continue higher, but it's been a bit of a slog. But I think we can climb. A little bit of trend line resistance there. Nothing too serious at about around 32.250, 32 300, but the big one is sort of 32,450, 32,600. I think we can get there again, but that chart's a little bit messy, so I'm not going to dwell on it. The DAX chart is really messy, but I think the DAX can go up just because it's going to hopefully follow the US, although it's really struggling because, of course, Germany has got its own problems. A lot of its own problems. So we're struggling to keep up, really, and I'm not that excited by the DAX at the moment. Some other little things to note. GBP CAD, your daily chart, the pound has collapsed against the Canadian dollar. Bullish engulfing candle on Friday could indicate that we're going to see a bit of a recovery. What do I want to do? Yeah, I want to put some fibs on here. Actually, these fibs are going to be, yeah. For some reason I've got something wrong with the y-axis of my chart here, so these fib levels are not accurate. I'm going to have to just open it out. Yeah, well, anyway, look, we've got a bullish engulfing candle on the GBP versus the New Zealand dollar. We're very oversold on the daily chart. We're very oversold on the weekly chart. So if you fancy a little bit of a gamble, you could be buying into that. Stop below last week's low, which is around 154.43, 153.40, 153.43. So I guess you need to stop below sort of 153.20, which is pretty big. We are talking about nearly 200 pips stop, but you know, if this runs up even just to this first trend line at around 157.00, it's kind of worth it, is it? I think so. Anyway, just bear in mind that. Let's have a look at some more stuff. New Zealand dollar versus the Canadian dollar. This is also looking like we could get a good recovery. So oversold on the weekly chart. Week before last, we had a nice, what am I going to call that, hammer candle, indicating, you know, well, we traded all the way down, strong rally up, ended up closing higher on the week. That's triggered a further green candle this last week. So this looks pretty positive for the New Zealand dollar versus the Canadian dollar at the moment. Is there anything else we need to know? We're getting into overbought territory, but I wouldn't worry about that too much. Now, look, there's a clue here. I don't know if you can see that pattern on the daily chart. It's not really that clear. So what we have to do is go to the 4-hour chart, and that's where you're going to see what I want to show. No, that's the 1-hour chart. 4-hour chart. Now, look at this. That to me looks like an inverse head and shoulders pattern. Look at that. Shoulder, head, shoulder. Now, we've only just broken and closed the week above the neckline. This could be a really good opportunity to get into a long position. Limited risk, really, because, and look, 200 period moving average on the 4-hour chart has been broken as well on a closing basis, on a weekly closing basis. This is pretty positive. This could be worth a long position, bang on the open. Where would I put my stop? Do you know what? We've got a moving average crossover here. We've got the 50 closing above, crossing above the 100. I bet we've got more bullish crosses on the, no, we haven't actually. I was going to say on the 1-hour chart. Well, we kind of have. We've got the 100 crossed above the 200, and it's just crossing above the 500. So we've got some bullish moving average crossovers on the week on the hourly chart. Let's put that neckline to the head and shoulders. I'm just going to stick it there like that. We've closed above it. The price is well above the moving averages on the hourly. So in the very short term, that looks quite positive. On the 4-hour chart, this is looking pretty positive too, for the reasons that I've just said. So that could be a nice little trade. Could be a trade of the week, actually. You've got less than 100 pips stop. I would say you got maybe 80 pips stop if you were to buy it there. I know we're not trading right now. And then what's the length? What's the length? There's the depth of the head and shoulders, which would give us a measured target. That would be, the low here is 79.06. The peak of the right shoulder 80.53. What am I talking about? 79.96, 80.53. Okay, so we're looking at nearly 100 pips, are we? 79. Why can't I do this in my head? 79.00 and 80.73. We're looking at 160 pips potential upside. So we're looking at 82.20. Oh, look. 82.36 is the 500 period moving average on the 4-hour chart. So we could be going there. That looks pretty likely to me. Maybe you want a tighter stop than 70 pips. Well, that would still give you a 2-to-1. No, it would give you a 3-to-1, wouldn't it? Nearly. That would give you a 3-to-1 risk reward potential. 3-to-1, 2-to-1. Anyway, decent enough. So there's your risk just below the 100 period moving average on the 4-hour chart at 80.00. There's your target, 82.20. That's not a bad little trade, is it? Okay, I've only just spotted that one. I wasn't expecting to see anything like that. I'm just having a quick flick through and just to see if there's any other opportunities that I can see as I look at the 4-hour charts, as I look at the 4 charts. Oh, look at this. GBP versus the Aussie. Is that a triple bottom? Triple bottoms are rare. If they hold, they're pretty bullish. So GBP versus the Aussie looks like that we could have just completed a triple bottom on the weekly chart. That would be very positive indeed. Maybe this pound is about to have a bit of a run. It does look like it, doesn't it? Look at that. Nice bullish candle for the pound versus the Aussie as we retest those levels. Not quite as bullish as that one, but that's a hammer with a long lower wick as we become oversold. This is quite interesting. This could certainly be something worth paying attention to. Again, maybe worth a little long position. You know, your stop's going to be tight below 171.70, so that's pretty simple. 150 pip stop maybe. First target 76.5, 176.5. That's got to be worth it, isn't it? Potential 300 pip profit for maybe 150 pip loss. I think that's worth it. Okay, that's it. That's some trade ideas for you, and I've now run on for 35 minutes, so I don't want to bore you. Okay, so some good opportunities there. We'll do this again next week. I'll throw out a video midweek if I see something exciting, so please make sure you are subscribed to the channel with your notification bell on. Give me a like, give me a share. I would really appreciate that. Give me some feedback. I really need feedback. I want to know if what I'm doing is helpful, and if you've got any suggestions on how I can improve, that would really be useful. Okay, that's it. Visit my website, daytradeideas.co.uk. Thanks a lot.